Hey everyone, me Kevin here. Okay, so here's exactly what happened with CPI and why we had a miss. The expectation was that we were going to have year-over-year inflation come down from 8.5% to 8.1%. We got 8.3%. So it's in the right direction, suggesting that inflation might be peaking, but the real hope was that inflation would come down to at least 8.1, if not even more, so that way we could clearly define a peak. Even though we're kind of like making that turn and we're rotating down, the concern now is that, well, crap, what if we're going to sort of plateau at higher levels? Now, at first read, I was a little nervous, and I only started feeling a little bit better when I actually looked at the details of the numbers, and those are what we're going to go through in just a moment with some charts. Month over month, headline inflation was expected to move up 0.2%, and we ended up getting 0.3%. And core inflation was expected to move up 0.4%. That's because as food and energy comes down, the other core sectors were expected to sort of come down to the effect where when we take out food and energy, we'd have the larger increase on the headline numbers for month over month. But when we look at core, we thought we would, by not removing these sort of negative hits to gasoline and food, we would end up seeing not as great of an improvement in month over month core. So we were expecting 0.4, but we got 0.6. So we missed on headline year over year by 0.1, the headline month over month by 0.1, and core by 0.2. That's the bad one though, because that's the one the Federal Reserve told us, hey, we want core to go down. And it went down from last month. Last month we had a 1.2% gain, right? That was insane. That was potentially a peak, but still 0.6%, pretty hot, because 0.6% means core inflation is still moving at 7.2%. That's sort of the speed that we're going at. That's called the annualized rate. And so when I looked at the actual CPI report, we can see this is sort of the reflection of what it looks like when we see CPI starting to rotate down. We were hoping again to have more of a rotation down, and we really got kicked in the butt right here with this core number, which is this section right here. That really kicked us in the butt. And there's a particular reason that I believe core came in so high, and it actually, remember, and this is the weird thing, okay? Core is supposed to strip out. It's supposed to be minus energy and food. Now, energy and food includes gas, right? But here's the problem. Part of core is actually airline and public transportation. Both of these price their fares based on how expensive gas and energy is. And we know that Brent crude and WTI crude are still above $100 a barrel each, and that leads to some expensive gas prices, obviously off the peak. But take a look at some of the gains we've had here on airline prices. In January, we had 5.2% increases in airline prices. In February, 10.7%, and in March, 18.6%. You'd think that may have peaked, but because we're also at the same time as we have relatively high gas prices seeing a surge in demand, what did we end up getting? We got 21.9% of an increase in airline ticket prices. Public transportation went up 14.4%, which is right above it. Look at these two numbers right here. If we just take the weight of airline prices, which is taking this weight right here, the relative importance rate of about 0.5%, multiplying that by the increase, we can explain about 0.12% of the miss solely from airlines. If we then include public transportation by going 0.00836, which is the weight, multiplying it by 14.4, we get another 1.2%. So you're literally getting, or 0.12 in this case, you're getting a combined 0.24 increase to core solely because of airlines and public transportation. Now, when we take a look at visualizing some of the changes here, look at this. This right here tells you how much rent contributes to inflation that we're seeing. And it's been consistently coming in at about 0.5% month over month. But it's becoming more of that stabilizing force in CPI that's actually keeping inflation hot, in the fact that while rent is still going up 0.5%, other things are coming down, so this is carrying more weight. So that's something to keep an eye on. And then here are your leading decliners. So these are things that went down in price from the last month. And so we can see admission to sporting goods down here, gasoline down about 6.44%, motor fuel down 5.81%, energy commodities, laundry equipment, information technology. These are things that came down. Look at this one. Televisions came down, apparel like women's suits, men's apparel, jewelry, personal computers, and peripherals. These are things that came down somewhere to the anywhere between 8% and 2% month over month. 2% decline in computers, by the way, month over month. That's actually a pretty good move, because that's somewhere around, if we do 2 times 12 to annualize that, that's like a 24% year over year decline when you get a 2% decline month over month on computers. So you kind of see some of that weakness potentially in the chips. You know, that makes me sort of think of like Corsair. It makes me think, you know, when we see washing machines, laundry equipment, I think of Whirlpool, I think of NVIDIA. You know, not so much looking at potentially apparel, although you have a big apparel section within Target, and then apparel stores themselves, whether that's Nordstrom or whatever else. Going to the upside, you really see that disaster here in airline fares, public transportation, eggs, margarine, window coverings, sewing machines, milk, transportation services. So again, the more we look at things like here, transportation services, airline fare, public transportation. This is interesting. I want to actually see what the weight here is for transportation services. I think that's the category right here, though. Yeah, it is. It is. Look at that. This category moved 3.3% as a full category here, but I prefer to just look at these right here because these are sort of, they give us a little bit more detail. They really tell us that this inflation read, again, missed probably by about 2.4%. Well, I should say, like, it makes more sense to look at it like this. 0.24, there we go, percent, solely because of these two things here. Now, personally, I actually don't think that's as scary. However, the market's going to hate this, right? The NASDAQ's selling off. We've got the 10-2 spread down. The 10-2 spread is now, I'll show you a screenshot here. 10-2, which is our yield curve. Remember, 0 means an inverted yield curve. Take a look at this right here. We were actually steepening nicely. We're at 30 basis points right now, which is still higher than where we have been since essentially March, which was a disaster, April 1st, when we had our inversion of the yield curve. This was really the beginning of the stock market sell-off we've had the last 5 or 6 weeks here now. But, you know, we've come down, not down as much as we were, which is good, but 10-year yields back to over 3%. And if we look at the break-evens, take me a second to get it here. I'm going to get the break-evens up. 5-year break-even, which is sort of the bond market's expectation of inflation. Here we go. We get the following chart. And we can see that we've really been seeing this nice decline here in inflation. This is really, really good in the market's expectations for inflation. Really, really good to see this. But really bad, obviously, that you know, now we're getting that pushback to the upside. It's just breaking that trend of falling, a falling break-even expectation, which it happens. You know, we get these little breaks to the upside. Hopefully, it ends up being transitory. But that missing course sucks. And unfortunately, the Federal Reserve can't just look at this and say, oh, well, it was just airlines, no big deal. Well, it actually is a big deal because, you know, you've got a situation where the Federal Reserve has to see, okay, well, this crazy airline spending clearly means that airlines have pricing power. And if airlines have pricing power, it means the consumer's still spending like crazy, and it just solidifies the fact that we need continued 50 basis point hikes, which really sucks. Now, if you jump on over to the actual QQQ here, you can see this essential disaster happening here. The NASDAQ now down 1.85%. You actually see a less of a degree of pain in Tesla than you ordinarily would. Tesla usually has a beta of 2 to the NASDAQ, which would mean we would expect Tesla right now to be down about 3.6%. It's down about 2.3%. So you're actually seeing less of pain here. And I'm not exactly sure why, but that's what the market's doing, sitting at about 782 right now. NASDAQ 1.59%. My suspicion is, reads like this are probably going to almost with certainty push us into recession in Q2 here, and we're going to look back at this time, which we won't actually know, probably, my guess, until, let's see, the second quarter ends April, May, June, probably late July, early August, we'll have the next GDP data, and that GDP data is going to tell us, potentially that we're in a recession. And which we could be the entire year. Now, it's also worth noting that tomorrow we have PPI numbers that are coming out. PPI final demand is expected to come in month over month at 0.5%, down from 1.4. The core is expected to be 0.6, and I mean, if we get a miss here as well to the upside, it's not going to end the pain for the stock market anytime soon. So I do think this puts, essentially cold water on hopes for a short-term rally here. Kind of disappointing, and all thanks really there to airlines, which really good measure though of consumers, right? So here's your report. You could thank consumers for traveling. Speaking of which, I have a flight today. Yeah, flying to Florida. Got to go to Tampa. Then I got to fly to Miami. Then after that, I got to fly to Florence, Italy. So there won't be a market closing live stream today because, I'm flying around. Sorry, I guess that means I'm contributing to inflation. Which contributing to inflation, I guess maybe I'm also hurting with that by reminding you that we're going to have the largest price increase ever on the programs on building your long-term wealth, linked down below. This probably feels quite insensitive to be talking about this in the CPI report, so I'm just going to kind of slowly back away from that one. Yeah.